Well, yes, UK has surpassed India in terms of the market capital size, and it's now the sixth largest equity market in the world. But now let's go back in the timeline and see what has actually happened. In the month of May last year itself, India pipped UK to become the fifth largest market in the equity segment. And important thing is, in the month of January itself, France dislodged India from the fifth position, and now currently UK has also leapfrogged India in terms of equity market size. Now let's look at the main reasons why there has been a growth in the UK numbers, and of course the growth in the UK numbers are coming in because of a weaker pound which improved the exports. But there are two important reasons for India's downfall as well, and of course Adani Group's share Rout was there, and the second reason is the weaker rupee. Even the FPI numbers, if you see in equities over the last 2 months, it has actually fallen by more than 30,000 crore rupees. But what are the main actually numbers coming in? And of course you see UK has reached a market cap of $3.11 trillion, and that is slightly higher by almost $5 billion as compared to the India's market cap, which is coming in at almost $3.1 trillion. Now apart from the numbers, even the MSCI index for India, that has also dropped almost 6.1% this year, and overall if we see the India's market cap, that has also fallen by almost $231 billion or almost 7% in this year itself. Now Adani Group at a combined basis has actually contributed 60% of this total wealth erosion in the Indian economy and in the equity segment. Now of course the Adani Group markets erosion also stood at almost $145 billion on a year-to-date basis. Now apart from this, let's look at the performance of the Indian markets and how it has performed against its peers, be it the developed market, be it markets such as US, China, Japan, Hong Kong. All of them have been in the positive, however a single digit return, and barring France, which had almost a 12% return in this year itself. But as when it comes to India, the Nifty index, that has also fallen 7%, and that's the only outlier this year where we are seeing selling happening. Apart from this also, we spoke with fund manager and they've stated that a lot of fund is being allocated to Taiwan as well as China on the theme of reopening. And of course the valuations are also a cause of concern in the emerging markets. Now apart from that, also if you see the entire market cap of India, that is also actually fallen by almost more than $200 billion, but that's a word of caution coming in. Now this is the current situation, but over the long term period, of course the analysts say that the growth levers are intact for India's growth, and despite being a premium market when it comes to valuations, the fund managers have stated that India still commands a strong respect because there's a strong runway happening as the government incentives also kick in. And do remember, this is the last year before the elections, so a lot of government support and SOPs would be given to the Indian economy space. Now the important thing is also an important trigger coming in for the Indian space is of course the growth in the domestic consumption. So that is something which we'll be watching out for, and of course the interest rates, whether they will be slowing down as per the RBI moves or we might expect interest rate cuts, and that will be actually beneficial for a lot of sectors, especially the housing sector and the sectors which are allied with that growth. And do remember, there's one positive shoot as well, and that is the infra capex theme, and that has actually picked up, while the NPA cycle of banks, that has also come down. So at the end of the tunnel, there is still light for the Indian equity markets.
If you like this video, then like, share and subscribe to ET Now.